Good morning, everybody. This is Dennis Woe with the Active Trend Traders, and I'll say good morning here in California, and I'll say good evening to Michael Bishop, who's joined us from Zurich, Switzerland. Michael, how are you this afternoon?
Hello, I'm great. Nice weather. Also in Switzerland, it seems that summer has arrived or will arrive.
Okay, well, that's absolutely awesome. I know that, yeah, we had weather in the 90s earlier this week, and then a cool or cold front has kind of blown into the Bay Area, and so it's sitting at 62 today is going to be the high, and I'm scheduled to go downtown to the Tenderloin uh, this evening to do some ministry work with the homeless. So it may be a little bit cold, and the wind is blowing big time. So let's get going. Got a lot of stuff to cover today. I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And then here's Michael's disclaimer. Michael, the European disclaimer more or less says a lot the same way, and just points out the risk in, there's always a risk in trading, right?
Let me see it. I think so.
Okay.
I think for paper trading, something like that, we don't have as a disclaimer. That's something.
Okay.
Yes. I think it's more. Yeah, exactly.
Well, I notice here it says the risk and price.
Actually, we are not allowed to consult any U.S. persons. I think that's the crucial.
Oh, I see. Right. Yeah.
The securities and rights mentioned may not be purchased or held by investors. Exactly. Yeah.
Okay. Well, that's interesting. But I always like to have your perspective from a European standpoint on what's going on in the world and globally. And so I think that adds a lot of flavor to what we're doing. I want to remind everybody that the active trend traders, we like, we're a service that provides trading information for people who want to parallel trade with me or look at the potential picks we have on a weekly basis. But I really put a lot of emphasis on trying to provide people with a really good training foundation so that then they can then be able to trade the things that they find, knowing that they're good things to trade. This coming Wednesday, we're going to be talking about target shooting entries and exits using the active trend trading system rules. We'll have some examples of that. We've just gone over this past week on how to utilize the intraday charts for after-hour analysis, and this will just add more to that. I always like to be adding bricks to the foundation so that folks can build on those to make some, to be able to, trade soundly. So what's going on with the market this week? I was reading some commentary that said that the market this week was quite violent. And I don't know if I would define it necessarily as being violent as much as just volatile, and non-directional. Volatile, non-direction, and the S&P is now stuck between support and resistance. When we look at the chart, we'll chat a little bit about what we can expect from that if it holds or doesn't hold the 50-day moving average going into the close. The NASDAQ, it's back to resistance. Now what? Same thing with the question that we had last week on the Russell was, will support hold? And the answer was no, it didn't. And the big question we have is, one, is the market poised to fall? It appears like it is, but there's a lot of folks, there's a lot of analysts out there that are saying the same thing, is that this market, we don't know what's holding this market up. It looks like it wants to go lower. But at the same time, oftentimes when all the analysts are lined up on a particular side, the teeter-totter, the elephant jumps on the other side of the teeter-totter and just, shoots them in the foot, because the market is a an entity that just loves to take us out at the knees. And so what I've seen, what we've seen most of the year so far, this is a very short-term market. And it's one of those just get in, get out. If you can pick up 5% or 10%, that's great. Um, but it's been very, very whippy, especially as it gets towards its tops and towards its bottom. There was that one run from the mid part of February up to the mid part of April, which was an excellent run for a lot of different stocks. But it was, for many of them, it was a bullish run within an overarching downtrend. Michael, are you seeing some of the same things over in Europe?
Yeah, nothing special. Or I mean, what we see now is that the dollar has quite a solid uptrend.
Uh-huh.
I think it was oversold, and I mean, from the U.S. market, what's a little bit special is we are now in an expiry week.
Yes.
Today, the weekly options expiring.
Yeah.
And Monday was very strong.
Yeah.
So that was kind of a little bit too early, or it was hard to imagine how if this really should go on the whole week. And then Monday, Tuesday, Thursday were pretty weak.
Yep.
And now we have a little rebound, so that I'd say it's a little bit strange that we had such a weak midweek, but at the end another pretty boring week.
Yes, without a doubt. Yeah, the monthly option week.
Yeah. This was Wednesday. This Fed rumors for a hike in June. Yeah. Okay. Now,
right.
agreed. Yeah. This is a little bit an excitement.
Yeah, monthly option expiration week tends to have an upward bias, and more so than what we actually saw in the upward, this past week. But today, yeah, the rebound, as I was looking at the market last night, the rebound today back up into a resistance area was, it was expected, and and also there's a lot of. Do insurance stocks, Gino, I don't know. Gino asked a question, do insurance stocks go up when rates go up? That's a great question. Maybe somebody...
in theory, yes.
Okay.
I mean, banks, especially retail banks and insurance business, they should take profit if interest rates go up. Yeah.
Yeah.
But I mean, in this in these little doses, I'd say it's more speculation or market velocity than fundamental reasons.
Yes, and that's one of the things we saw from with regarding an outside influence on the market this past week is a couple of the Fed governors came out with very hawkish type comments about raising rates, almost like it's a sure thing to raise the rates in June, and the market hiccuped a little bit with that. It'll be interesting to see the Fed on our Wednesday night. Mike Traeger was talking a little bit about how the Fed's over a barrel. They've lost a lot of credibility, and they're backed into a corner. And if the market, if the economy does go into kind of a stagnation type of economy, which is many people think that's where we are right now, then the Fed, needing to raise rates simply to provide some ammunition for when everything starts to fall apart again. And so that's one of the arguments for the Fed raising rates. Let's see what we got going on. Here's a go ahead, Michael.
I just looked it up. The XLF, that's the financial select sector.
Yeah.
And it was up for this week. A little bit, I thought above average for sure, but not dramatically.
Yeah, but it's been moving sideways too. XLF has been moving sideways, and just it seems like it's pinned right there at about the $23 mark. Because I'm in one of my accounts, I do have some puts that are out in October, with the expectation that that's going to fall going into the latter part of the year. But here's where we were last week this today. Here's where we are today. Let me see. Did I miss something? Oh, here's where we were last week. We were coming down here, approaching the lower reversal zone on the percentage of stocks above the 20-day moving average. It had dropped to 35.89. It actually dropped a little bit below the 30. Did not give us a trigger for the early warning alerts, and then has bounced back up today on today's strength. We'll see if that is maintained. This is one of the indicators that Mike Traeger and I do use for the early warning alerts, along with some other proprietary. And as we were saying on Wednesday night, that even with this dropping down below the 30, it has not given us a alert trigger to trigger the early warning alerts. And so we're standing by for some of the other things we look at to line up with what's going on in this particular indicator. One of the things we find that's interesting is on a monthly basis, and this is a monthly chart of the percentage of stocks above their 200-day moving average, and it appears that from April we have turned down a little bit. However, we won't have a 100% accurate reading on this until we do in fact finish off the month. And so it is seeming to hold above this 50 level. If it drops down below that, that may be an indication, even intra-month. If it drops down below the 50 level, that would be, telling us that more of the stocks are falling, back below their 200-day moving average, which is a definition of a downtrend. And what we saw when the market fell out of bed back here in the latter part of 2015 and then 2016 is many of the stocks, there was a lot of inertia from the number of stocks that were well below their 200-day moving average that helped us suck down the S&P and the NASDAQ. On this is the upper brownish chart is the spiders. And as we talked about it before, it's basically the only thing we can say about it at this point is it's still operating within a support resistance zone, with the lows being down here about 185 and the highs being up about 210. And it's been fluctuating in that since the midsection of late 2014. So we've basically been in more or less a sideways moving market. Here's where the market was as of about 10 or 11 o'clock this morning. Both the Dow and the S&P have given up some of the gains that they were showing through last week. The NASDAQ is basically, and the NASDAQ composite has kind of held its ground for the week. And the Russell is in fact down a little bit. That's another big question that I'm watching very closely. Is the Russell going to lead us down? Oftentimes the small cap stock index is the one that leads us both in and out of significant downturns or upturns. And will the Russell start unraveling and falling apart? We'll see. This week is a hard week to kind of gauge that because it is monthly expiration week. When I look at that, we're not necessarily seeing the momentum that we would normally see in a expiration week coming into the market. And again, I'll be looking towards, what's it going to do as we move towards the close in the last hour to half hour. If the and let's, matter of fact, why don't we go over here to the charts really quick. And here's the S&P daily on the left, weekly on the right. And there's a couple of items I want to show folks. Is one, I want to duplicate that drawing which is the top here, and I want to basically extend it to there. And as you can see, since we hit the high on the 20th of April this year, we've gone into this downward sloping downward sloping channel. If today we, I'm looking towards the close, and this middle line, this red line here, is the 50-day moving average. Do we close above it or not? Price action today, and we saw this price action several days. Monday, it rebounded up into the cluster of the 8 and 20 moving average, rolled over on Tuesday, fluctuated, came up and touched the 8 on Wednesday, fell down yesterday to the 100-day moving average, put in this really nice hammer, which we'd expect, from that, and it is getting a confirmation off the hammer, but it's just confirming right back into resistance. And at this particular point has rolled back over. So if we close back below approximately the 2047 level, or right at the 2050 level, because that's where a large open interest is open on, about the 205 level on the spiders. It'll be, a large open interest on both calls and puts at that level, which tells us a lot of people are short both calls and puts, and they're trying to drive it for expiration as close to that 205 level as possible so that they can then collect their premium without going in the tank. So that's what I'm seeing here. As you can see, over the last several weeks, our TSI measure of momentum is just basically gone flat. The momentum indicator itself has also gotten kind of down below the zero line, which means we're in a downtrend, but it's just kind of oscillated down here, which is oftentimes an indication that there could be more downside, or that the market just really can't make up its mind which way it wants to go. So short term, we're in a short-term downtrend following a longer-term uptrend within the confines of a longer-term downtrend. And so we'll see what takes place there if weakness comes into the market towards the end of the day. Should be interesting. Let's go over here to the NASDAQ. And one thing I'm going to start offering, guys, when we do these free webinars is I am going to highlight one or two stocks that I think have potentials for the following week. And so with ideas on where to get into them and that kind of stuff, because I want to be able to it won't be a bunch of stocks, but it'll be one or two that I think have good opportunities setting themselves up. The NASDAQ, we have this cluster of the 50, the 100, the 200-day moving average, and the 20-day moving average, all sitting here forming a very significant level of resistance. Price action today, yes, we get a nice bounce from yesterday's hammer, right back up into the resistance, and we stop. Price action on the NASDAQ is below the 50, and all the other significant longer term moving averages. So the NASDAQ is telling us that, hey, I'm weak. Same thing we get over here on the weekly chart. The 8 is almost crossing down below both the 20 and 40 week moving average. And so this could be another, they call it a death cross, when the longer term, 10, they usually use the 10-week moving average, but 10 to 8-week moving average crosses below the 20 and the 40 particularly, because that's the 200-day moving average. They consider that to be called a death cross, and that there will be more downside to follow. We'll see. I have projected down, again, this line here, back down to the, if we maintain symmetry with what this move from here to here, that transposed over shows that price action, well, one would have to go through this 3,800, but the price action around the week of the 27th of June, if the symmetry is maintained, could be down around 63.93, correction, 36.93, let's say 3,700, which, from the price action of today would be a drop of only about 15%. And that would definitely put the NASDAQ into a bear market environment. So we'll see if this in fact does maintain, because the other thing it could do here is if this support here at the 4280 level holds, and it retested a couple times, we could bounce right back up, but we do have this downtrending channel line. And so that's some of the things that we're looking at. Right now, the moving averages above the price action are in fact acting as very good levels of resistance. And so if you are planning trades for like the in this case the Qs, waiting for the price action to get into that those clusters and then trading to the downside is a good idea. The Russell. There we go. Russell, similar type situation. We came down, broke through, so it also is in a short-term downtrend. We can draw a line across these highs, and as you see, we're coming up and we're retesting that short-term downtrend resistance line. We had broken down into support down here right above the 1080 level and then rebounded back up. The 1100 level tended to be, or seems to be a psychological level where if prices fall below that, we can expect, could expect more downside, but we're trying to reclaim it. So we've got just a battle going on right now between the buyers and sellers. Price action, again, right back up into the moving averages that right now are acting as a cluster of resistance. And, what we'll be looking at, going into the end of the day, if we drop back below the 50, which is at the 1106 level, and perhaps in this case, this is the 100-day moving average, the 1102 level, then that would kind of put a taint on next week for potential more downside movement going into next week. And similar type action on the TSI, on the momentum, on a daily basis, and of course the longer, stronger weekly is already rolled over, and the momentum is continuing to fall off. One of the things that Mike and I were talking about earlier was the concept of this on the weekly and monthly charts, showing that how the momentum started coming out of the Russell back actually in 2012, or correction, 2013, in December 2013, and the momentum started rolling out of this even while the Russell was moving on up to make a new high, and that new high, that negative divergence on a monthly chart was basically added up as once we got some reversal signals, the Russell capitulated down to the downside. Michael, what would you like to say about the markets?
Well, what I see, and it's odd or I don't like is volatility is just too low. I mean, there
Yeah.
was a little bit volatility spike on Monday, and today we have, I think, 6% down the VIX, something like that.
Yes.
So it's not, it's a very passive mode.
Yeah. Yeah. And when the volatility is low like that, I'll go over to a daily weekly chart as we see over here. When the volatility is low like that, what's that, what's that telling us? There's no fear in the market, right?
Yeah,
Or
yeah,
very little fear.
yeah, yeah.
And there's an old adage is that, it pays to be, fearful of the market when you don't think you need to be fearful, or when other people are not fearful. And then bold when other people are fearful. And so there's absolutely no fear going on down here as the VIX continues to drive lower. And this is the ETF that emulates the VIX, which is the volatility index for the S&P. And you can go and look.
And there's no trend. I mean, 2 days people like financial stocks, the other 2 days they like Nasdaq, the other 2 days they like gold, the other 2 days they jump on oil. So there's not, in the last couple of weeks, I haven't seen any strong trend.
Maybe the analogy is kind of like they keep jumping from ship to ship, but none of the ships are leaving port.
Yeah, but in a almost daily matter, and not. I mean, that's pretty usual that every 6 months or so people are jumping or try to jump into another boat, but
Yep.
it's not.
And we're seeing this work its way. And so yeah, it's very interesting. And so with the lows on, let me go back to the monthly weekly chart to give us a better picture here. I mean, the VIX is, let me go back and look at the VIX instead of this. Hold on just a second. And if you're interested in what is the VXN is the volatility index on the NASDAQ. And so as you can see, this gives you a little bit better picture of how, on a monthly basis, we're down here and we've fallen back down into the lows where this, this low, and we hit a low like this back in around July 2014, and we pop back up, but it is just not really moving that much. Let's see, Eric says, good to the reversion to the mean on the VIX. Yeah, it's just basically oscillating around that the 20-day moving average at this point. Let's see what we're looking at like on a daily, weekly. And to me, Michael, what I'm kind of seeing is, like the markets, the actual VIX itself is kind of putting in this rounded bottom, and with an anticipation of trying to move higher. Short term, it is in a slight uptrend, but will that continue? Let's take a real quick look at the VXN. What's it telling us? It's a little bit, earlier stage, but a similar type pattern. And oftentimes those patterns can drive on for several weeks before you finally get that pop to the upside. And so we'll see if the current market condition does in fact emulate the what happened back in 2008. We may see a ramp up in volatility going into the June-July timeframe, or if the Fed is successful in the national banks are successful in holding the market together, they may wait until after November before it falls apart, until November is which is of course the presidential election in the United States. Then once that's determined, then the VIX may go nuts. Let's just say that the rest of this year is going to be will continue to be a lot of fun and challenges to be a trader. Interesting, huh, Michael?
Yeah, and then in 2 weeks we have the Brexit, the possible Brexit vote in the UK.
Yeah.
And the market clearly says there is no change. So Great Britain will stay in the European community.
Okay.
So I think if that's not the case, then we have a typical event that will shake the markets.
Yeah, and we also have coming up around the 15th of June, we have the Fed meeting again, and yep. So that should be a lot of fun. So okay, let's get back to the
and maybe some strong signal in what direction ever from China.
Yes. Yeah.
Also, and I would rather guess on the positive side than on the negative side.
What do you mean by the positive versus the negative side?
I mean, if you look, for instance, FXI, the Chinese A shares.
Yep.
The market is exhausted, but volatility extremely low and not much action going on. So
right.
For me, that would be rather be a signal that the market can surprise to the positive side more than the negative.
Yeah, that makes sense. I mean, a positive move on the market to the upside, would not be surprising. And we have to remember that we are currently trading in a range where it could move into the upside, but still stay within its range and provide a short-term trading opportunity to the upside. It's, like I said, it's a kind of a crazy market going on out there. FXI. So, okay, let's get on with getting on. So let's see. So path of least resistance. I'm waiting for the close today to be able to if we close below if the S&P closes below the 50-day moving average, I'm going to say that the short-term path of least resistance is going to be to the downside. Longer term, I could see, and Mike Traeger does not agree with me on this, but I could see us just moving sideways within a very wide trading range. If the S&P closes above the 50-day moving average, I could see us going back up to the top of the channel line, which would give us a short-term path of least resistance back up to the upside. And so if that sounds like something that's totally non-committal, it's because right now that's what the market's given us, and I am a little bit non-committal. I'm looking at resistance, trade to resistance, then basically get into a short-term downward trade, or wait for support and then get into a short-term upward trade. I like the inverse index ETFs because they seem to be making the turn on the bottom to come up the other side. That's like TZA, SQQQ, and SPXU. And so, but will it continue on? We'll see. Okay. Those of you who are trading strategy 3 with us, we had 2 great trades this week to close out nicely for a gain this week, a little bit of the upside. One of the things that we are doing is we're taking some positions and applying the kind of the same strategy we utilized for the strategy 3. In other words, I'm looking for stocks or index ETF where I can also sell weekly premium against to give it, because of the volatility, the fluctuation in the market. I'm trying to give us a little bit more leeway on either side with the expected move up, so we can collect a little bit of premium like we did on TZA this week to go along with the upward movement of TZA. And that worked out very well. Those who got into the weekly covered call, I think we sold it for 70 cents and then bought it back for a dime today. So we made $60 per contract. Not a lot, but it does offset on a on a stock that is on on an ETF that's only $42. That offsets, and you do that on a weekly basis. You're offsetting your underlying price basis and our cost basis, and so that's what's a nice move up. Here's where we're sitting. Strategy 3 again is kind of driving the boat right now. Strategy 1, and what's very interesting, we've been sitting there. I know a lot of folks are getting really frustrated because strategy 1 just has been really whippy this year, and I want to show you something that's similar to strategy 1. And this is a new product put out by Investor Business Daily, and this is their swing trader product. And look, the trades that they've been doing. Small losses for the past, where we're like going out. Well, this goes only go down to the mid part of April, but it's they too, portfolio building this year has been really challenged. Question, Tracy, when you sell premium, do you have to own the stock? The question to answer that question is yes and no. Some people, if a person is just starting to learn how to sell premium, I don't suggest they do it without either one of two things: owning the underlying stock or ETF, or a longer term option that they can sell against. That way it helps keep down on the margin necessary. Some people sell what they call naked options, but they primarily lean towards the only selling the put side of those. That way, if it is exercised, they have to buy that stock. A lot of people do not like to do naked calls, but at the same time, if a person is applying sound trade management where they've got their stops identified and all that kind of stuff, so they're limiting their risk where their risk is measurable, then some can in fact sell premium without owning the stocks. But our strategy 3 is based on owning the option LEAPS out in right now January 2017. And so let's see here. Okay. So we've got one more week to go with our equity curve, and we've brought it up, and the target I'm looking for, we're sitting at about $12,000 right now, a little bit over 12,000. This mark right here is about 16,000. So we'll see if we can get this trending on back up so we can eventually cross this white line. And the white line here, the straight line, the guideline, if benchmark, if you will, reflects a 40% return for the year. So we want to get that driving up the other way. Here is that strategy. This is the strategy number 3 that we did on Tesla. Opened the position in September of last year. It's currently up 57%. We invested $9,000. We have taken in $11,000, therefore making our cost basis on this trade a negative $20. In other words, we paid for our underlying asset. I have 35 more weeks, and we've been collecting on average, somewhere between right here it says $329 per week on average, which equates to an income of about $1,365 per month, and we've got 35 more weeks to work on, trying to sell this much premium per week, which over that 35 weeks, that would bring in another $9,634, and we would more than meet our, our desired return of 100% on our initial investment. And so if you're interested in finding out more of this, we've got training videos available down here, a training webinar recording, and I think on that particular one, it is open for folks who just want to go in and take a look. And we've got a couple of other recordings on that particular strategy. So Fuse presentations, monthly BAM meetings, Bay Area Moneymakers in San Jose. This upcoming meeting, the first Saturday in June, will be on hands-on practice. And then our trading webinars every Wednesday night at 2:30. And I'm working on putting together a how-to strategy for folks who are specifically interested in Strategy 3, a training session that would be open for that. And so, as I often say, if you do have a group you'd like to have somebody to present to, IBD group or not IBD group, I have a bunch of different presentations that I can in fact do for any level of group. The active trend trading system is based on the 5 pillars of active trend trading, which is pillar one, what to trade, and we only focus on high quality IBD growth stocks and index ETFs. We focus on when to enter, when to exit, what strategy we're going to use, and what to expect. I'm a firm believer that you have to have a sound system in place, and then you add to it your strategies. And to keep it simple, I focus on 3 simple strategies. Portfolio building, strategy 1, basic options, strategy 2, and then strategy 3, which is the wealth building, income generation. I know this slide is getting redundant, but we're still under the dome. This is a quarterly chart of the S&P. I'm going to get with Mike to see if he'll get this updated for us, but we are still functioning within this 2100 down to 1800 on the S&P, and I'm pretty sure we still have a confirmed cross to the downside on the MACD. So if you're not a member but would like to check out, get a little bit more in depth in active trend trading, you can join us for, this is the last week. We'll have a special going on, or actually not the last week. Next week will be the last week through the 30th through Memorial Day, where you can join and get a month's membership for $4.99 just to try it out. You can find that at that web, and there's where you can go and just for the registration, because you can just go right to the special membership amount for people who attend the webinar. And the monthly, what we provide on a monthly basis as far as training and other services is worth about $300 a month. So I'll just basically, what's going to happen when you retire? Move to Hawaii and then start traveling around the country? Scott, that's a great question. 1, I have no intentions of retiring because I love doing what I'm doing too much. Yes, I am moving from California to Hawaii. However, I will continue to do what I do. I will just be waking up earlier in the morning. The market closes in Hawaii somewhere between 10 o'clock in the morning and 11 o'clock. So I'm really looking forward to that because I think it's going to actually enhance some of the services that we provide with regards to getting the after-hour alerts out towards the, still within the day with few of those first thing in the morning alerts. And so a slight change in how I'll be doing my stuff. And I will probably switch to the real early, because the market's either open at 3:30 in the morning or 4:30 in the morning. Mondays and Fridays tend to be, dead market days. So I'll be up, real early prior to the market on Tuesday, Wednesday, and Thursday. At least that's the plan. Now, when I'm traveling around the country with my wife in August, as long as I have my Verizon hotspot, I can be in the market if she's driving. Of course, I wouldn't do it unless she was driving. And so you'll still get your reports, the whole 9 yards, while we are out and about around the countryside. Looking forward to that trip too. We're going, looks like we're going all the way up to into Washington State, then down through Boise, Idaho, Cheyenne, Wyoming, Denver, Colorado.
Great. I want to be. I want to see Oregon and this area. I'd like to.
Yeah.
Go there once.
So, anyway, Michael, that's all I've got for today. See you next week. Have a great weekend. I am going to go over a couple of stocks that I'm watching as we move into next week, though. So, Michael, you got anything else, bud?
Just I grabbed up a couple of funny statements this week. One statement is McKinsey never heard of that that they care about stock markets. They predict a long-term bear market around the corner.
Okay.
And then I think RBS, it's one of the biggest European banks. It's the Royal Bank of Scotland. They're also very bearish. And as a contrarian, I don't like these messages.
Well, you know, but that's one of the things is there are a lot of, you know, so many people. I mean, there's a lot of people out there expecting the market to just come crashing down.
Yeah.
But the market, like I said, the market likes to fool us.
Yeah.
You know, and I would venture to say that if it is going to crash, it's not going to crash when anybody thinks it's going to crash. And
Yeah.
so with that said, so hey, let's cover a couple of stocks that I'm looking at. This is one, the TZA, which is the index ETF, the inverse index ETF for the IWM or the Russell. And we've been watching this. It is putting in some very nice patterns. It's back down to a support level of the 20-day moving average and also this 4212 level. Again, it's providing the opposite signals as what we're seeing with the IWM and the Russell and the S&P and the NASDAQ. And so it's a 3-time leverage, and so when it runs hard. But again, it's got resistance up here at 45, but any bounce down in here where it bounces back off that, like that could be, you know, a good place for an entry point. The thing that I like about this also is it does have, in other words, it's at an entry point now. The other thing I like about this is that it does have the weekly options that if a person wants to get in, give it a little breathing room, you can sell options against it while you're waiting for it to spring back up. If the market does turn sideways, well, from its move down here, this was in, just to give you some idea of how much, this was 1230, and it ran up, you know, in total 70%. Yes, Tracy. And then utilize either a 4% stop loss. And Tracy asked, would I get in now if I missed the entry earlier on? Yeah, because we got in at, I think, 4150-ish, 4160-ish. And so this would be an interesting place to go ahead and, you know, again, I would be ready to sell options against it, the weekly options, and then see how that turns out. But it looks like if we go over to and I'll just pop over here really quick to here's the TZA. This is on a 1-hour chart, as we talked about on Wednesday night. And it's right at a really nice level of support. And we've got the, you know, true strength indicator on the hourly chart starting to roll back up, and it hasn't taken out the 8 period or the 50 period, which coincides with the 8-day moving average, but it's close. On my hourly charts, I have a 50-period moving average, which as you can see is sitting at 40, well, no, it's not, it's sitting at about 42.61, and the 8-day moving average, because I said it's, it's close, 8-day moving average is sitting at about 42.71. The other, and then a couple of other, Karen asked that we do a real quick, I was going to, Tesla was going to be one of those that I touched on, Karen, so thank you for asking. TSLA. Okay. Tesla is one of those interesting positions. One, it has, look at this, and I've left on the Fibonacci retracements from the low to the high, and we came back down, we dropped off the high, fell back down, came right to the 50% retracement, danced around it a little bit, and then rebounded off of it. If you recall, on Tuesday, this is this candle right here, is when we sold the put on Tesla for the strategy 3, which within a couple of days it generated its profit, and we got out of that. I think we sold it for $3.50 and got out of it for, or we sold it for about $4 and got out for about 70 or 80 cents. No, $3.90 and we got out for, that's right, we got out of it for 80 cents, so it was a $300 gain. So it's popped back up. It is running into this resistance. What I'm going to do on Tesla, Karen, is I'm going to wait until next week to see how things work their way out, because I've got a little bit of conflicting information. One is I've got the TSI starting to roll up, the momentum starting to roll up in conflict with what the weeklies are showing us. I did go ahead and we sold the 220 call for next week as we reached up here to the 220 level. I think it was sitting at about 218 or 219 when we actually sold the call. And we'll see if that just expires worthless. And that call, I think we picked up, what did we pick up on that call? I picked up $4.15 on that particular call to sell it, and that's already working out for us fine. But that's what I'm kind of looking at. Popping back over to the intraday chart again. It has moved back up above the 8, which is the 50 period moving average on the hourly chart, and we're back up above the moving averages. And so what I'm looking for Tesla to do is, wait for that pullback back into, let me get my pencil here, for that either the moving averages to catch up with it or a pullback into the moving averages, and then we'll see if we can rebound and take out this 220 to 221 level. But if it pulls back all the way to 215, we will clear out and move out of that, the call that we sold today, and probably pick, it'll be close to picking up the $300 that we're after for a profit, and then see if it'll move up from there. On a daily chart, that may look more like moving all the way back down here to the 20, or the 8-day moving average, and then moving up. Because as we said, right now, on an intraday chart, it looks like it wants to roll over. Let's see if it rolls over into the end of the day. Because if we get selling into the close today, that should be reflective as we move into next week, where the market may open down next week. Is that good, Karen? Okay. And one of the other things with
just
go ahead.
Finished reading the book of Musk. It was I think a bestseller. There was a book about him.
Yeah.
And I think he's a very interesting guy, but not an easy one to work with.
Yeah, well, apparently he's in a in hot water right now because he brought in some folks to work at his plants from like Lithuania or something, and he was only paying them
Okay.
like $5 an hour or something like that. I don't know what the story is, but
Yeah,
yeah,
and also I think his 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 top managers during the last 10 years, that's a killing field, you could say.
yeah, yeah. So anyway, so we're going to watch this one into the end of the day and see, you know, which way is it going to go. If it drops back down, that's fine because the 220 call that we sold will, you know, throw off a lot of premium back to us. One of the other things that I like to do with Tesla, especially if it gets down around a defined level of support, like down here at the 205 level, is I'll go out 2 weeks and buy a at or slightly out of the money couple, you know, maybe a couple of strike prices out of the money call or put, and because it moves sometimes $7 to $10 a day, those type of trades can turn around very quickly, but you're going to be wanting to wait for peaks in the TSI to do that. And that particular kind of trade is not for everybody. That's why I don't put out alerts on those kind of trades. You know, because I see them intraday, and I know the folks who are gainfully employed can't place those trades and trade it. But it turns out very well. Let's take a look at, now you guys don't mind me sharing what I'm looking at for next week, right? Okay. Here's one that is looking very interesting as a pre-earnings trade. This is 6, you know, 5 fell apart on us. So 6, it seemed like the proper thing in progression. What we've got going on is basically it's got earnings all the way out here, actually July timeframe, but it's put in a kind of interesting pattern. It's not doing a lot of selling, but it's got support down here at, you know, about 37, 39, 37.50 level that it's retesting on a very regular basis. Positive, it's above the 50, above the 100, above the 200, and had a little bit of buying interest. However, it's got this level of resistance that's up here at 58.74, and so it's fluctuating around the 8-day moving average. And so if we get back down here and retest down in this, you know, between 37.39, 37.40 and 38, or we pop up above 58.74, I would put it up about 58.80. If we move up above 58.80, then that would be a potential breakout entry on this. And what's our expected move? Well, we basically take our expected move and move it up to these past highs, and it's about a 6.7% gain to the total. If we just go to the bodies, it's about a 4.4% gain, but something interesting to keep an eye on. I like that one. Another one that I don't think we're late to the party on, but it made a really nice move today. We're seeing a lot of these kind of patterns where stocks are coming down, hitting and maintaining a support level. And so AVGO, I really like this one for a pre-earnings trade. Earnings are in 6.2 after market close, AMC. We popped up above and it was fluctuating, you know, down here at the 140. And when we find a stock that's doing this, where we're putting in a level of support, okay, it's holding that 140, it's holding that 140, and it's done it several times, you can design your entry around there. The other thing I like about AVGO, they have very good open interest on there with options. And so what I would be looking at next week is to play this off of either the 20-day moving average or the 8-day moving average as it comes bound on up, which is going to coincide with about somewhere between, I would say, 144.50 and 145, with a projected move up, back up prior to earnings at least to the 53 level, and it could get a wild hair, and I'll go all the way up to the, almost up to 160, which would be about a 10% gain. So that's a couple that I'm looking at for going into next week. And that's another thing I'm going to be doing in the traders report that comes out for premium members on, watch my time here, on over the weekend. I'm going to be tableizing fewer stocks, but with more detail about where I want to enter. That way, it will not make the text and the email alerts, as needed, but I'll still put those out. But it'll give folks other ideas on where they want to do. So, okay, Michael, that's it for me for the day. Any other stocks you folks want to talk about? I got about 2 minutes before shutting up shop. Okay, Michael, I'll see you later.
Okay, thanks for having me. Have a wonderful weekend. See you next week, hopefully.
Okay, thanks.
No, next week I'm not here.
Okay. Oh, you're not going to be here next week?
In Austria.
Okay. Anyway, have a good one then, my friend.
Thank you. Bye.
And so Tracy wants to take a look at 5. 5's kind of doing that what we're seeing from those other stocks, Tracy. I'm looking at 5 right now. It also has, I want to activate that drawing really quick and stretch it down a little bit. There we go. What are we seeing going on? It found a level of support that just happens to coincide, in this case, with the 100-day moving average. Downside, it's below the 50, and the 8 and the 20 have rolled back over. But it's got earnings coming up on the, guess what, the 2nd of June. So I would be looking at any kind of retest down here in the 38 level to the, what's the lows here, 36.82, which I think from current levels, how long? It's about a 4.24% drop. But it's looking on the daily chart like it wants to roll back up and take back off. Volume's okay, but it's fighting against what we're seeing over here on the weekly chart, which has more momentum to the downside. But we have found great support, and so I would be looking more towards the support around this area, anywhere in that long wick, where if it drops like the 37.45 or something like that, that would be a potential, and rebounds, that would be a potential entry area. Yeah, 5 and expect resistance when it comes into this overhead trend line here. But if you picked it up at 37.50 and it moves back up to there, that's about a 5% gain. Now, if it breaks out prior to earnings and gets a bid to move up, then it could actually go back all the way back up here to the 41, almost 42 level. So, okay, folks, if there's no other stocks, I want you to have an awesome weekend. My wife and I were celebrating our grandson's one year birthday this weekend. So have a wonderful weekend. God bless everybody. Bye-bye.